Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and I just heard word on the street is that the XRP Las Vegas conference has sold out imminently, as in today. That's the word on the street. Check this out. Link2 has just added PolySign today onto the platform. This is big. You know how we always talk about all the money on this channel? When you hear all the money, think derivatives. That's CFTC. Look who PolySign just hired.
Appointed Charles Ockert, a former member of the U.S. Commodities Future Trading Commission's Technical Advisory Committee, to be the new Chief Technical Officer to oversee the next stage of PolySign's global expansion and technology development. The addition of Charles, aka Chuck, to PolySign's leadership team signals the heightened interest by the world's largest banks, fund managers, and other financial institutions in PolySign's institutional-grade infrastructure. Chuck has deep experience in developing and implementing tech solutions for prominent institutions, including Deutsche Bank and JP Morgan Chase. Chuck's firsthand knowledge of institutional use cases around DLT, AI, and cybersecurity will help drive market adoption of PolySign's proprietary products. So, from PolySign developing a new operating system for capital markets to its existing relationships with incumbents, the addition of Chuck's expertise to PolySign's senior leadership team is critical as the company continues to scale and participate in the world's largest transactions. So join Link2. Don't miss this opportunity to invest in PolySign today.
Okay. Now, John Deaton was on Real Vision. I was watching it a few minutes ago, and I clipped this out. John, you can kind of tell what John Deaton thinks is going to happen. I think John is leaning towards this judgment then settlement thing. Watch this.
Well, according to Ripple, the only way they settle is that, and I don't think it's a matter of how much they pay. The only thing they said that the SEC would have to agree that XRP, ongoing and future sales of XRP, including in the secondary market when I trade it or anyone else does from Coinbase or any other exchange, that those are not securities. And unless there's that agreement or that stipulation made, Ripple will not settle. So I don't see the SEC agreeing to that. That's why I don't see a settlement. I see a settlement after a judgment. So if the judge comes down and she says this or that, or she says there needs to be a jury and this is going to hang on for a couple more years, then maybe the two can get together to come out with some compromise. But at the end of the day, a settlement is just between two parties and doesn't have any precedential effect on other tokens. Ripple's already indicated if they lose, they're appealing to the Second Circuit. And then, of course, it could go to the Supreme Court. And that's when you would get what's called the Ripple test that arguably could replace the Howey test. Or it wouldn't replace it. It would just be the Ripple test applied to digital assets, so to speak.
That's my call right there, folks. We're going to get, I think this judge, to follow the law, has to say XRP itself and in the secondary market is not a security. And then I think Gary's going to settle with them on that basis, because Gary only wants it to apply to XRP, not to the rest of the industry. That way he can go after everybody else. And I think that's what the Charles Hoskinsons are terrified of. Now, CoinDesk, softer than expectation inflation figures for March have sent Bitcoin higher by more than 1% early Wednesday. Now, I wanted to point something out here. Today, Warren Buffett was on CNBC. And, you know, I used to be the same way, folks. But I'm older and I'm wiser, and I've been around crypto long enough now. And you have to understand, now that we've seen that Homeland Security video where the government knows who Satoshi is, the 4 Satoshis, once I saw that, that was a game changer for me, because that told me that the government has some kind of an angle here. And I don't trust the government, like probably many of you. Well, here's a few things we know. First thing we know is that CNBC is in bed with the government. There's a reason that Gary Gensler and all of them are so comfortable going on CNBC all the time, and they're never asked any real questions. There's a reason why Jay Clayton, instead of being asked any questions, is a contributor after he leaves the SEC on CNBC. So what does that tell you about how they tee up Warren Buffett when the time's right? And they always make sure they get a soundbite of Warren Buffett bashing Bitcoin. Okay? Well, I've been around a little while, and let me tell you what, folks, I had a flashback this morning and I went and looked for it. Okay? And also, same model. What have they been doing? Bitcoin for the last few years. Okay? Then what about Jim Cramer? You got him going back and forth. Bitcoin, Ethereum, and then all of crypto, you're crazy if you own it. These people can't be trusted. That's the overall point. But here's what I'm getting at. Many of you are too young to know this, but back in 1999, when we had the internet come along and you had the dot-com boom and bust, okay? When that happened, Warren Buffett was one of the only people before the dot-com bust. He was one of the only people that said he didn't trust these valuations, and many of the valuations in the dot-com stocks were like 150 to 300 times their earnings. It was crazy, okay? A company would go public and it would, overnight, the stock would go to $100, and it made no sense. And anybody, if they were really stopping and thinking, everybody was just caught up in the greed of the thing. Well, Warren Buffett sees the same thing in Bitcoin. But don't take and I did this warning, pay attention. Those who fail to learn from history are doomed to repeat it, Winston Churchill. Fact, Warren Buffett warned about the dot-com bubble in 99. I remember him being laughed at by the new upstart millionaires. They had their Lambos back then. To remember, it was Ferraris, I don't remember. In 2000, it all collapsed after he talked about it in 1999. I'm going to show you the video here in a second. Fact, he's warning about Bitcoin now. Fact, the feds know who Satoshi is and have continued to let the world think they don't. Why? That's the question. Why? Ask yourself, what does the government want? What does Gary Gensler want? What do these people want? What they want is to shut down all the upstarts and send it into the arms of Wall Street. They want to control it. They're fine with crypto. They don't have a problem with crypto. It's crypto that's not controlled by government. That's what they're wanting to crack down on. So look, CNBC showed, we might have a blower in a second, but we'll deal with it. In fact, CNBC showed Buffett's dot-com warnings in 99. They were showing Bitcoin warnings now. Bitcoin feels like the setup of setups. It does to me. If you wanted to really kill crypto and ensure that nobody ever touched it again unless it was coming from Wall Street, Bitcoin is the kill shot, folks. Who would win if this was a setup? Government. They would hold it up as a failure, as the reason that decentralization doesn't work. Now I want you to watch this video. First part is Warren Buffett and Charlie Munger in 1999 before the dot-com bust, and the second part is him on CNBC this morning comparing Bitcoin to gambling.
We do not necessarily regard the internet there's no question, if you're in the early stages of promotion, and particularly if you've got a reputation as a successful in that, but in this case it wouldn't make much difference because the whole field has gone wild, you will make a lot of money selling to the next stage and the next stage and the next stage. But in terms of picking out businesses that are going to do wonderfully as businesses, not as stocks for a while, but as businesses, I don't think it's necessarily so easy in the internet world. And I would say that if you were to ask some very top names in the field to name the next 5 companies out of the chute, or the next 10 companies out of the chute, and predict that one of them will earn, say, the $200 million I used as a threshold 6 or 7 years from now, I'm not so sure if they gave you a list that they would name a single one. That doesn't mean they might not make a lot of money by being early investors in them because they sell out to the next group and so on. But in the end, they have to succeed as businesses. And if few will succeed as businesses, the internet will have a huge impact on the world. But I'm not so sure that that makes it an easy investment decision. Charlie?
Well, at least it's not an easy investment decision for us, and that's what we're looking for.
When you go back to the tulip mania went from 1634 to 1637, only lasted 3 years. And here we have, if you're right about Bitcoin, something that's now lasted something along the lines of 15 years. And so I've been trying to understand if in fact you're right and this is not just rat poison squared, but is not a thing, when it would be unveiled as not a thing.
That's predicting when speculation will end, or when the gambling instinct will go away, and when more people want to get out than are getting in. And I have no way of. If I thought I was good at that, I'd figure out a way to make a lot of money and different things.
All right, so you get the point. And Cowboy Crypto, who is the official cowboy of the Digital Asset Investor channel, just happens to point this out. Berkshire Hathaway, Warren Buffett's investments, Bank of America. And we've got, here's a Ripple ad with Bank of America underneath it. And we know the history with Bank of America. Billionaire Warren Buffett says Bitcoin is a gambling token and it doesn't have any intrinsic value. I tend to agree with him. Now, check this out. Naveen Gupta, it's already happening.
So if I'm if I'm an outside commentator, we should stop building these corresponding banking networks entirely.
And it's already happening, some bit of it, right? But of course, what I would say is
Is it just because the remittance companies make so much more money doing the corresponding banking networks?
I think I would say two things, right? So one, I would say because there is not regulatory clarity, and we'll talk about it a little bit more in all parts of the world. RippleNet, for example, the ODL solution can't be launched in a number of jurisdictions because there's no regulatory clarity, right? So today, if
to achieve that full connectivity,
absolutely, they need to have the full portfolio of this thing. And then the second thing that I would say is that all innovations take time. So there are, of course, adopters, and now it's at critical mass where it's moving very, very fast, but also at the same time, adoption itself takes time, right? So if you and me, after a few years, having a discussion to say, hey, what is the state right now? I would be surprised that there is any institution that is not taking advantage of the blockchain technology that is available to essentially significantly create efficiency versus where they are today.
All right, it's already happening. Now, I'm not going to play the whole thing as long, but I did want to play you a little bit of this where they're talking about the automated market makers, XRP.
For those of you who do not know, we recently proposed an automated native support for automated market maker on XRP Ledger. And I would like to get your thoughts on how do you think XRP Ledger has some inherent cool features compared to other blockchains? How do you think XRP Ledger is uniquely positioned to support a more lucrative and more efficient automated market maker?
Yeah, as Lauren just mentioned, the XRP Ledger actually implements one of the first kind of DEX version in the DLT space. XRP Ledger natively actually has decentralized exchanges. It's just previously it was supporting order book-based decentralized exchanges. Now it's supporting AMM. It's just something that's very powerful. And compared to the existing solutions that are widely seen on EVM-compatible chains, such as Ethereum, Polygon, BNB chain, and so on and so forth, this particular, the XRP Ledger solution, instead of being implemented on the application level, it is actually native to the chain. As far as I understand, it is actually implemented directly on the chain level, on layer one, so to speak. And I think that has a lot of advantages. For example, we have all the liquidity all on layer one. You can utilize the liquidity to increase liquidity efficiency. And secondly, we all know that, Shihao was just saying the problem with other EVM compatible chains, the fact that miners can be bribed with higher gas fee, and then they can reorder the transactions, causing front running, this kind of issue. These issues would be mitigated on the XRP ledger due to different sorting mechanism, actually definitive sorting mechanisms, such that validators would not be bribed, and also due to the different consensus mechanism, which is much more efficient on the XRP ledger compared to other chains.
But Ethereum. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, and tell your friends and family that there is a blower outside of my window and it's getting louder. So I'm going to go. Thanks.